Hey guys, Daniel here. Happy Thursday, and today's episode is all about the stimulus check. So if you got one, here's 5 tips about what is that you should do now that you got your stimulus check. All right, let's get started. Hey there again. So if you're new to this channel, my name is Daniel Lungu. I'm a financial advisor, and this channel is all about helping you with your most important financial goals. So today's episode, as I mentioned in the beginning, is all about the stimulus check. So if you're one of the fortunate ones who got it, here's some 5 tips for you to know what is that you should do, and some advice, practical advice from a financial advisor. So before getting actually into the tips, let's first start what is the stimulus check and who is it for, and give you a little bit of background. So because there's so much uncertainty, so I want to clarify some things. So the stimulus check is part of the stimulus package that has been approved by the federal government. We had $2.2 trillion approved, and as of right now, the government has issued $1,200 to qualified individuals and families. The qualification is based on your tax filing status both in 2018 or 19. So if you have made as an individual less than $75,000 a year, you qualified for the entire $1,200, or $150,000 for a married couple filing jointly. Now, if you make more than that, that does not mean that you do not qualify to get the check. It just means that you have what we call a fade out, or phase out, I should say, to how much you will be received. So, and all of that information, I will link it to the IRS website, and that you can find more information, and you can find out exactly how much you're gonna get. All right, so now that we got this out of the way, let's get into the tips of what I think as a financial advisor you should do if you got that stimulus check. So, tip number 1. Of course, with the current economic hardship, if you fell behind paying any one of your bills, you need to make sure to take that advantage and catch up with some of the bills, because you want to definitely avoid any late fees, any late payments, charges that come with not paying your bills on time. Now, some providers, some financial institutions, if those are the ones that you are being late for, are more lenient, where they are not charging you late fee. So my biggest advice as a financial advisor, go and contact those financial institutions or those organizations that you might have been late to pay, and find out what some of the incentives or benefits that they have due to the hardship that is currently going on because of the coronavirus. So the first thing, again, catch up on any late payments. All right, tip number 2. Tip number 2 is actually revolves around paying down debt. So if you have any type of debt outstanding, especially credit card, the stimulus check is great to help you, what we call the debt snowball effect, on paying down debt. Now, if you're out of job, if you're unemployed right now, you can still use the stimulus check to help you. So the way snowball payoff works, you take an amount and you pay the credit card, let's say any credit card, or you put a certain amount towards a payment, an accelerated amount, and what happens is you put all the other cards, in case you have multiple ones, on minimum payment. So you usually go to the lowest amount to pay it off faster, and then you take the minimum payment that you were supposed to pay towards that card, plus whatever upfront amount, which is usually $200, and now you apply that towards the second card. So now you have more that you apply towards the second card, and this way it's kind of snowballs. As you pay off the second card, now you go to the third one, and you have even greater amount to apply towards paying down the debt faster. So here's what I suggest doing if you have the stimulus check and you kind of need that help getting over the hump. So you take that $1,200. That's of course in taking the consideration that you still have some income coming in, and that you're not late on any other payments, and you apply that towards maybe paying down the lowest balance that you have. So if you have, let's say, one of those cards that are less than $1,200 and you still have some lingering payments, maybe it's your Best Buy credit card because you bought some of the latest technology, take that stimulus check, pay it off, and now take the minimum payment or whatever payment that you've regularly been scheduled to pay towards that card and apply it towards your next card. And now you're starting to create a momentum. So this is how you can knock down your payment and on your debt a little bit faster. Now, I want to clarify that the only debt that I'm excluding from this is your student loans, except private student loans. And the reason being is because the government is issuing an approval to all the loan servicers who administer your student loans to be able to lower the interest rate to 0 and also forego student loan payments for 6 months. So that gives you a little bit of a breathing room right now that you can focus on some of your other debt, which is why if you have student loans right now, put it on pause, especially federal. That's again federal student loans, not private. If you have private, you still gotta pay. Unfortunately, I have no other help for you at this moment, at least right now. All right, tip number 3. Tip number 3 is about creating an emergency savings. So let's say you're still working, you don't have any payments that you are behind, you don't have any debt, but you still got the stimulus check. Okay, so what are you gonna do now? A lot of Americans, in fact, close to 72% of Americans don't have more than $1,000 of emergency. So maybe take that $1,200, don't go out and spend it, but rather use it for emergency. Take the opportunity to stack your emergency savings. In times like right now during the coronavirus, again, I'm filming this from home, just proved the importance of having an emergency fund that is well funded. Now, if you ask yourself, how much do I need to have an emergency? You need to have at least 3 to 6 months of your monthly expenses. Now, how you calculate this, I will have a sheet for you to fill out so you understand kind of like what is your monthly cash flow, how much comes in versus how much goes out. And based on that, you will be able to know how much money you need to have. So have that amount. Now, in case you ask yourself, how do I need to know if I need closer towards the 3 or closer towards the 6? The question is, what type of work is that you do? If you are a W-2 employee, so you get check every 2 weeks, every once a month, then maybe, be closer towards the 3 months. Just kind of have the confidence of 3 months because money coming in. Although times again, like right now, proved why having larger emergency maybe makes more sense. Now, if you're more a commission based or salary plus commission, you want to lean close towards the 6 months types of emergencies set aside. Now, it doesn't mean that you need to keep all that 6 months in the bank. You just need to keep it liquid enough where you can withdraw, even in a, let's say, like a liquid investment account. You're still able to liquefy some of your investments and pull the money out as well to cover. So I still think you need to have at least 2 months of emergency in the bank, liquid, readily accessible, but beyond that, you can go and put the money elsewhere. All right, so tip number 4. So we covered so far, catching up on any late payments, paying down debt, and number 3, we talked about emergency. Tip number 4 is let's start talking about investments. If you are new to investments and you have heard, especially right now during the time of recession, that it's the best time to invest, you're absolutely right. It's never too late. And in fact, the beautiful saying, the best time to plant a tree was 20 years ago, and the second best time to plant a tree is today. So take the opportunity, plant your seeds and let that tree grow. And when I'm talking about tree is your, of course, investment account. Start plan for your future. And that can be whatever it is. It can be through mutual funds, ETFs, and I will link in this video up or down the link to my previous video where I talk about the difference between ETFs and mutual funds, so you can understand which one is more right for you and which one you preferred. And if you have any questions, just comment below and I promise I will give you some feedback and some more information about that. So now is the time. Start thinking about maybe create an IRA account. Start creating maybe an individual account if you don't have. Now, if you don't know what individual account or joint account is, simply a financial advisor jargon for just investment account where the money is fairly liquid, but the money is invested. It's usually parked in a brokerage account somewhere where you invest the money. Now, it can also be in a mutual fund company but still the money is liquid. You can always liquidate the funds and transfer them back to your account without any penalties, like some of the retirement accounts out there. But again, the general category is plan for your future. Start to plan for your future or future of loved ones, of course. Maybe now it's a good time to plan for your kids' education or college fund that you've been promising yourself that you're gonna fund for a long time, but you have not done so. So now it's a good time to do so. All right, tip number 5, as I told you today, 5 tips. So tip number 5 might be a little bit different, but I think it's very applicable to right now. And tip number 5 is think about income protection planning. And what I mean by income protection planning is either find out and purchase some type of insurance. A lot of the time it can be as simple as also life insurance or disability insurance that enables you in situations like this, when there is a loss of income or worse, loss of life, especially in dark times like right now, that that you have the peace of mind that your loved ones are taken care of. Now, take that maybe $1,200 and look to maybe apply for the type of insurance that can substitute your income in the event that the worst is happening, and at least that you know that now your loved ones are protected. A lot of the times, the $1,200, depending of course on your risk tolerance and your health ratings, the $1,200 can substitute a whole 12 months of premium payment, and that can cover you for the following year, etc. Now, I do want to disclaim one thing, especially right now because of COVID-19. Life insurance company became a lot more strict about underwriting, and they're a little bit slower, but still take that in account and consider doing that as part of like the complete package. So if you have everything else, all the buckets in place, consider protecting your loved ones. Now, if you think that by having working somewhere and you had a life insurance part of your employer, 2 things that I want to clarify. Number 1, if you've been laid off or you left your job, that coverage is not going with you. It's actually been terminated. So that's the biggest misconception that I want to clarify, because a lot of people say, oh, I have life insurance through work, but I ask them, what's going to happen if you've been laid off? What's going to happen if you're going to leave your work? That coverage is not going with you. So that leads to the second part, is that you always want to have a standalone protection plan for you and your loved ones, and it's better have something than nothing. So if all ducks in a row except having protection in place, consider using that stimulus package towards applying for some sort of protection for you and your loved one, because then there's nothing worse, and I've seen it unfortunately firsthand, than being impacted by illness or some disaster, which leaves the family a little bit with lack of income, especially if that individual who is now gone or impacted was the main breadwinner or the main provider. So let's finish on a happy note, okay guys? Again, if you got the stimulus check, these are 5 tips that I think as a financial advisor can give you a head start, even in dark times like right now, to better your financial situation and put you in a better place. And after all of this, and after we weather the storm, you will be much better off, in a much better place than where you were before. So if you have any questions, make sure to comment below. Feel free to, of course, to join our private Facebook group. We are a group of individuals where support one another. People can ask any questions that they have. It's absolutely free. I will link the group below. And of course, and most important thing, stay safe. So that's it guys for this week. If you have any questions, feel free to send me out, and until the next one, take care. Peace.